Hey, this is Scott Cole from whentobuyandsellstocks.com, and just wanted to give a little commentary about the stock market today, since it was a sizable day to the downside. I have been commenting that many people have been bearish for a little while, saying this rally just has gone on too far and there's too many headwinds for the market for it to go up. And I had argued that until we saw a true selling day, this rally was going to continue. However, we had seen signs, as I had indicated in my weekly commentary over the weekend. We had seen signs in recent days that this market might be ready to roll over a little bit. One of the things I had mentioned was weakness in the Russell 2000, and also I had noted some distribution days on the way up to the top. And as it turns out, the recent top, February 29th, turned out to be that was a distribution day there. We made a new high for the move and then closed lower on heavy volume that day, so that was kind of a key reversal, and a lot of people kind of ignored that. The next couple of days the market kind of struggled, and then this morning we had weakness in Europe, but that was on top of weakness in Asia as well. There's concerns that China is slowing down more than thought. We also had news out of Brazil that their economy in the fourth quarter only grew about 2.7%. And so we've got some issues going on. With that in mind, here's a true selling day. The Dow Jones was down over 200 points today, off 1.57%. Every major market average was down at least 1.3%. Most were down over 1.5% today. That's a true selling day. And at the end of trading today, hopefully you raised a little bit of cash. So I'm going to roll through some of the other averages. This is the Russell 2000. This has been one of the weaker ones of late, and it never came very close to its 2011 highs, unlike the Dow and the NASDAQ Composite. Now, I would argue today, I'm going to look at the chart of Apple. Apple ended up only down 0.5% today. It was down less than 3 points. And I believe because of that, the market actually would have been down quite a bit more. In fact, earlier in the day, Apple was down about 14 points. Actually down about 17 points. So Apple rallied back quite a bit, and that allowed the NASDAQ to only be down about 1.36%, and the S&P was only down about 1.5%. So the averages probably would have been a lot lower if it wasn't for Apple rallying back later in the day. So I still suggest that because of how big Apple is, it is masking some of the underlying weakness that we're seeing in the market. From my standpoint, a 200-point down day, 1.5% in the Dow. The advanced decline lines were actually a lot weaker than that. In fact, we had about 3,500 stocks that were down today, as opposed to only about 414 that were up. That's a pretty big ratio for a market that was only down 1.5%. So my suggestion is that this market is a little bit weaker than might be indicated by some of the stocks that have done pretty well and have held up. So keep that thought in mind. Today was a true selling day. That does not mean an absolute top is in. This could get reversed, within a couple days or even tomorrow if the market was able to rally 200 points in the Dow tomorrow. But we've got some big stuff on the horizon. This week, Greece is trying to refinance its debt, or some debt deal has to be approved, I believe, by Thursday. And we also have a big employment report on Friday. So stay tuned and stay on the defense, and hopefully you'll be able to get through these turbulent times relatively unscathed, and we'll see you down the road.